Hey folks, and welcome to this Hypnotic Symposium on the 11th of January 2023. I'm redoing this. I tried to do it a second ago, but everything got a little bit peculiar here, so I had to change some things. Okay, this is better. Okay, so today I want to talk a little bit about expansion and contraction in prices, and talk about how they apply in nature and how you can use cycles of expansion and contraction, or rather deviation and returning to a mean, if you will, to time your entries. Okay, and so if you consider, for example, a piece of wood. Okay, you have a table here. Looks like this. I'm quite occupied with wood at the moment because we're in the middle of a building project. Like this. So you have your table here, right? And you take a piece of wood and you put it on the top of the table and you extend it 50% over. So this is the midpoint of the table. So if I take a piece of wood like this and I push the end of the piece of wood that is hanging over the table, and I push it down, what's going to happen to it? It's going to bend. And the more I push, the more it's going to bend. And so if I push it down to here, for example, and I release it, is it going to continue to move down? No, it's not. It's going to seek equilibrium. It's going to want to move higher. And maybe when this happens, when I push it up, I push it really far down without it breaking, and I release it, maybe it's even going to, when it rebalances, maybe it's going to pop back here on the first release, and it'll go down here. Then the second one, it'll get a little bit closer to equilibrium, and eventually, when it stops vibrating, it'll be right in the middle, just as it was when we started. Okay? And you can take this concept, which is super simple and very natural, and you can apply it to pretty much anything. So if I look at this, and we look at the histogram, let me zoom out so we have more. Okay. When we look at the histogram, and you can see that prices are moving higher, the histogram is moving up. What is this the same as? What's it, rather not the same as, similar to? It's like our table. Okay, we have our table and we have the piece of wood we put just above it or below it, and now we're applying pressure. Okay, so the piece of wood is now lower. So maybe the piece of wood is bent down to here. Okay, but in this situation, it's the opposite. We're actually applying pressure here from below, and the piece of wood is maybe bending a little bit higher. Okay, so we're reaching up. So we have positive expansion, just like we have this. Prices are expanding positively. Okay, when it releases, what's the most natural thing to happen next? Well, prices, this piece of wood, a piece of elastic, a piece of glass, whatever, it will naturally respond and it will seek equilibrium. And the reason it does this for a piece of wood is physics. And the reason it does it in a marketplace is because of the available liquidity. Okay, so you have your order book like so. We've talked about this hundreds of times over the years. Okay, and you have, it looks like this, more or less. Okay, and then you have at the top, you have the sellers. Let me get some red. We had red is for selling here, and the lower you go, the less selling there is. Maybe there's a little bit of selling down here as well. And if you go to the bottom of the book, the more you have at the bottom, the closer you are to the bottom, you have more buying. And you start to move up, and the buying goes down a little bit. Okay? And so the reason price will often snap back, like it has done here, and here, and it likely will do here at some stage, and here, is because it has to. Like the piece of wood that's being bent, the price of this asset has to come back. Why? Because, as you can see here, the higher price gets, the fewer buyers there are for the asset. Okay, and so there's nothing there's nothing to support prices. There's nothing to support the increase in prices. Okay, it goes up. There's nothing. There's nobody's buying at high prices. Okay, and so the natural thing to happen is for price to come back down towards the bottom of the book, which we have here, which will facilitate support for that. Okay, so as the order book, as the bids dry up here to the upside, or the offers, if prices are moving lower, this is the same thing as bending the piece of wood higher. We stretch it higher like we did here. Okay, so there's no buying. Okay, and so when I let go of this piece of wood, when prices reach high enough prices, we don't always know where they are for asset prices, the most natural thing to do is for prices to move lower. Okay, so if we look at this, I mean, how do we know when prices are going to slow down? Well, the place that we know where prices will typically slow down is where we have historically seen prices show us that there is an increased interest to participate in the buying and selling of this asset. And you can see that we had one here. We had positive expansion, negative expansion, positive, negative, positive, negative. Okay, so each time price turns, okay, the reason it turned is because there was an imbalance in the amount of buyers relative to the amount of sellers. Okay, and so when prices return to here, the most natural thing for prices to do is to rebalance this. Okay, so this is essentially when we release the wood, we're releasing the plank of wood at a historical level. When prices are stretched, we have positive expansion like this. Okay, and so applied to trading, you would look at this on a daily chart, because a daily chart is important. You can see a high, you can see a lot of information about the bigger transactions taking place. Okay, and you would position yourself, you would align yourself with the higher time frame, so the major liquidity, the big order books, and you would time it on the smaller time frame. So what you would essentially be looking for now on this small time frame is, okay, let me mark that level off on the daily chart. You want to see the candle that released? It's right there. We're actually right on it. Let's go like this. And then we go to the 1 hour chart. Okay, prices are already in there now. Okay, and this is the upper edge of that area. So right now, we want a positive expansion to occur. So we want prices to reach, we want prices to move beyond this high here, because when prices move beyond this high here, we know that we are stretching that elastic. We're beginning to push that piece of wood towards the floor, or rather pull it towards the ceiling. So when it gets there, when prices get there, within the context of a daily area of supply, the only natural thing for price to do is to revert to the mean. Okay, is to contract. We expand and we contract. Okay, so we're essentially contracting to this. This is a period of equilibrium. Here we have some equilibrium. Here we have a very interesting equilibrium, a very short one. Okay, this is actually a part of this one here. And so prices will naturally seek thicker liquidity, which is essentially what's happening here. So on the smaller time frame, as price enters a profound area of supply or demand, you want to see prices reach for higher prices for selling, and you want to see them reach for lower prices for buying. And so when you have a price structure like this, you want prices to reach beyond that. When prices reach beyond that, then we have positive expansion. We have a new territory being explored, and we have very high likelihood that prices will reject because they have to. Okay? Okay, good. Well, I'm going to leave it at that. I hope this made sense. If you have any questions, let me know.